I want to start off with a Twitter poll because we love Twitter polls here at Bloomberg. And specifically when we asked our Twitter audience what the priority in Africa needs to be, infrastructure was at the top. So it just shows just how important it is. Sergio, I wanted to start with you because IFC, of course, infrastructure and the importance of infrastructure is key to your business. Can you talk about what exactly you're focusing on with the IFC and growing infrastructure and the gaps that we're seeing in infrastructure across the continent right now?
Sure, Jennifer, and good morning. And you're absolutely right. The Twitter poll does show that infrastructure is extremely important, and it's particularly important in Africa, where there's still significant gaps when you look at it in terms of what is needed to be done. I mean, I think we made some estimates that by 2030, the continent needs investments of about 150 billion a year to get to cover the gap that is still there. And right now, the level of investment is about half of it. So what are we focusing on? Infrastructure has several main components. I think the first one we're focusing on is energy. Energy is one of the areas, I mean, we heard it in the previous panel, that is extremely important in Africa. When you look at the growth of the population, the number of people who are not connected to it, or not have access to energy, is actually growing, estimated at about 600 million people on the continent. So there's really a need to do something there. 2/3 of the people in the world that don't have access to energy are in Africa. So we have been very focused on that sector. We've invested on the IFC side about $3 billion over the last decade in energy. And we've been, of course, focusing first and foremost on renewable energy. This is the future of energy, and that's something that we've really been focusing on. But we're also looking at innovation in energy and looking at different models like mini-grids and off-grids and different systems. We just launched, for instance, in DRC, our program called Mini-Grid, Scaling Mini-Grid, which is taking a simple formula of bringing in private sector, working with the government, setting up a replicable model that we can take to one secondary city and then replicate to another one and another one and another one. And we launched this in November, and we're very excited to see that this program should work, and then we can, of course, replicate it also in other countries over the continent.
Where are you seeing it working particularly well?
So it's particularly suited. Mini grids called mini, but in reality, as you know, it's actually pretty sizable grids in secondary cities that can serve several millions of people. So it's particularly suitable for countries with large geography and where populations are spread. So DRC, obvious candidate, but also the Sahel. We've been looking at developing these programs in other countries like Chad. Any country where population is quite spread, it's quite important. I think we estimated about 30% of the population in Africa that doesn't have access to energy today could be served through this type of structure. So it's something that's very important. So that's one. The other part that is also very important in what we're focusing on is digitalization and infrastructure. I mean, it was not the first one on the poll, but there is a component of infrastructure behind it that we are supporting. And particularly with what happened with the pandemic, we have been really seeing an acceleration of the digitalization in Africa. And we have also identified that there's still significant gaps on the infrastructure side of it. So we have been investing just in 1 year, we put $1 billion in that sector last year, and we're putting almost another $1 billion this year on shared infrastructure, whether it's cables, whether it's towers for mobiles and so on, really trying to push that part of the agenda. And of course, transport infrastructure, I don't want to talk about it before Maher does, but it is a very important sector for us. And it's also very important because when you look at the evolution of the economy in Africa and you see the development of regional value chains and the importance of having a continent that is connected, all the transport infrastructure is extremely important there.
And Maher, we were talking a little bit about this a few days ago specifically. When it comes to, I mean, Sergio outlined this very well for us, the money is there, right? I mean, the investing is going to a lot of these projects. We see that in this chart right here. There's a lot of investment into some of these projects, but the projects are not getting done in most cases. So what's happening in between? I mean, as a private operator, what is it that you're noticing the gaps in?
I think most of the money that is out there is trying to find its way to projects through governments and public sector, when actually a lot of the major projects that are underway are public-private sector or even private sector projects. and private sector bring in a whole different approach to raising funding. What we've had experience in is that challenges around stability and stable power sources, connectivity, pose a big challenge for investors trying to bring funds into the country. And the private sector need to work with the public sector in trying to resolve these kind of challenges. The funds that are coming into Africa are usually looking for very clear guarantees. They are patient capital, but trying to find the right projects that they get to, which are mainly now being driven by private sector development, whether it is in the ports, whether it's in the ICT sector or the transport sector. These are posing challenges where we found in our case, working in Nigeria, we've worked on a number of projects in the ICT sector. We've developed a data center where we've had to raise funding from a mix of Exim banks and private equity. And this kind of funding has its own challenges that are quite different than the challenges that, let's say, you get from the public sector and working with governments. I think that if we are able to bridge some of the reliability issues that are found in terms of power, logistics, matching the seaports with the infrastructure that goes hinterland, it can unlock a lot of more potential.
How do we get there?
I think working closely with governments, trying to make them understand that improving the ease of doing business and where the challenges, the perceived risk that financiers find entering into African markets is a very important step. The issues around connectivity across the continent is a very important part of moving goods. And reaching the population is a big factor in unlocking the potential of the continent.
And Sergio, just on that note that Maher was just making, a lot of it too is contingent on the government that is in power, right? And if they are supporting some of these projects. And so how are you with IFC sort of navigating that and, you know, finding the right projects to support and take to the public sector to then back?
So Jennifer, I think the point there, which is quite important, is that when we look at how we can support infrastructure in Africa, a lot of financiers, and you said it, there's funds available, and there's a lot of financiers who are looking for long-term funding, long-term opportunities to put their funding. And I think the major problem is that it's very hard to find what banks call bankable projects, right? So there's no project that are completely finalized and that you can say, okay, we'll go and we'll do that. And then the second point is I think exactly what Maher was saying, which is, you know, governments in Africa, like not just in Africa, in many other continents, they have limitations on their fiscal space. And given the needs of the populations to develop infrastructure, you do need private sector capital to come into these projects. So what the approach we took at IFC, we realized this a few years ago when we were looking at, you know, we had a small investment portfolio in infrastructure in Africa. And we were asking ourselves, why are we not doing more? So, well, actually, we are probably financing about 70 to 80% of the projects out there. So why is it so small? How do we grow this? How do we grow this space? So that's an approach we took about 3-4 years ago of creating ourselves as much as we can. And being IFC being the private sector arm of the World Bank Group, working with the World Bank, working with other development partners, working with governments, working with private sector, how do we create a space where there's more projects? So what that means is that when we look at a development need, there's a need for energy, there's a need for digital infrastructure, there's a need for a new port or an expanded port. We go and we engage with partners. We say, okay, what's happening? How can we help? How can we create the space? And it's regulatory work, it's working with the governments in terms of finding the right structure, private-public partnership, helping structure that, and then go to investors and say, look, there is an opportunity. Have you looked? I mean, I was sorry to come back to my mini grids in DRC, but it's an important one. How many investors are looking at mini grids in DRC? Now that we're doing all the work with the governments, with the municipalities on finding the right background where investors can come, now we're going and knocking a door saying, come and you know, bid for this type of projects. So it's really about, I mean, our motto now is creating markets, creating opportunities. It's creating markets and infrastructure.
Maher, do you see a benefit to maybe starting small versus, tackling a lot of these infrastructure problems on a grand scale with governments? I mean, how do you as a private operator sort of approach this?
No, definitely. It's much more advantageous to break it down to smaller blocks because you manage the risk better and you can get much more private sector involvement. Companies that are focused on certain areas, whether it is in the ICT sector, the seaport sector, roads, bridges, can focus on areas that they are knowledgeable in and can bring the requisite finance into that specific area. I mean, some of the examples that we've worked on, we're currently developing a seaport and free zone in Lagos, and we're having to go to a mix of financiers. And we've broken it down into climate funds, focusing on power and renewable energy. We're focusing on private deals to develop the seaport, and we're also focusing on our banks to develop the main infrastructure of the port. So we've broken it down into blocks, and it makes it much easier to approach it. Not easy, but easier.
How much do you have to engage the government then in those discussions?
Certainly, you need all the fiscal support, you need consistent policies, you need to have them engaged in certain areas where their agencies are responsible. So if you're working in the maritime sector, you have to ensure that the National Ports Authority is supporting you. You're working to develop a power project, you have to ensure that the power sector is supporting it. Especially if you develop more power than you need, then you need to be able to feed it back into the grid, and that takes the right permitting to be able to do that.
But there are not consistent policies, correct? I mean, how do you get around that at this point in time?
Well, the policies are consistent across administrations. It's just making sure that from one administration to the other they continue, and where we've managed to have some progress is around economic zones, free zones, which are popping up across the continent. In Nigeria, there's over 30 free zones, and there's more popping up across the West Africa region. And these economic zones, like the one we are developing in Lagos, they give kind of a reliable set of tariffs, levies, land rights, which are very important to investors coming in, to financiers, the guarantees that come with it, and underlying factors that start to increase risk and the ease of doing business. The economic zones actually resolve a lot of those issues. So there is some progress in that space.
And Sergio, I just want to get to this question from our audience for you. So it sort of lends to what we were just talking about. So in most African countries, it's near impossible to fund infrastructure projects without government buy-in, which is what we were talking about, or political nods from the top. How do you address this specifically from an IFC perspective? I mean, how much are you engaging with the public sector?
First, I think it's a very good question, but it's a question that is even beyond Africa. In all countries, infrastructure projects for many subsectors of infrastructure are either delivering a public good or something similar, which therefore requires some form of government involvement. I think what we focus on is really on looking what is the role of the government in these projects, and how does the government deliver what the government needs to deliver in an effective way. And it's a lot around, first, making sure the regulatory environment is appropriate, that there is a bigger plan, and that's a lot of the work we do with our colleagues at the World Bank in terms of like, what should the energy sector be in this country? How should the telecom sector be in this country? And then promote a system where you have better delivery for the public, and therefore looking at more competition so that prices can go down, that quality can go up. And then we have teams that can help governments in terms of building their own capacity to be able to be the counterparty of private sector. It's very important to have regulators that are effective, that can look at how different players from the private sector come in and help deliver the goods. I mean, we look at what we can do. So we have both at the World Bank and IFC, we have teams who do that. We have in particular at IFC, we have teams that do specifically give advice to governments on private-public partnerships. And what these teams do, what we do is that we engage with the government who says, okay, I want to bring in a new operator of telecoms. Let's say we want to bring a second or third license and so on, or we want to build a toll road somewhere, and so how do I do it as a government? So we have teams who can help on the technical side, on the regulatory side, on the financial side, on also very importantly on environment and social issues, right? So if you want to build a new road, are you going to displace people? Are you going to have an impact on the environment, on biodiversity? So we look at all these aspects, and we help the government follow what we consider best practice, international best practice on all these dimensions. And then these teams can also help governments then go and do for a bid, and so that private sector can come in and make the best offer, so that you end up having good private sector companies following good standards coming and applying and investing in Africa.
But it's not just the initial project, right, that these governments need to buy into. It's seeing it through, right, which is a lot of the issue that we're seeing. A lot of these projects are just not getting done. So is that where the regulation comes in? Is that sort of what you're alluding to?
So I think it's a combination of you need the regulation, so you need, and a lot of work needs to be done in many countries to make sure that regulations are up to date, particularly when you look at digital infrastructure, which a few generations ago we didn't know what it means, so we need more updated regulations. But then it's a lot around capacity, right? Because if you set up a regulator, you need to have the people who have the competence, and there's a lot of competent people in Africa can do that. It's just a question of making sure that they get selected to the jobs, and that they get the opportunity to help their countries that. And this is an area that we can also help.
Is that happening anywhere specifically? Would you say the DRC is an example of that?
So I think it's interesting to see that in DRC, for instance, what we've been doing is working at the municipal level, right? So we've been identifying some of the municipalities where this can happen. And yes, I think it's happening, and you can see it across many other countries in Africa, where you see innovative projects in infrastructure that are coming up, whether it's around renewable energies, but also around, I would say, more traditional infrastructure such as roads and airports. We have helped develop good models of private sector management of airports, which is pretty common around the world, and you can see that some of the governments in Africa are embracing that model also, and bringing in private sector operators. And then what you see is a shift from sort of a situation where you had something that was not very effective, usually needed subsidies from the government every year, to very profitable operations that pay taxes to the government, pay revenues to the government, and that's a very good model to follow.
And we're also seeing much more increasingly, and I want to bring up another chart that we have too, specifically when we talk about projects being invested in. China specifically is obviously a very big part of this story. And this chart specifically just shows how much, I don't think it's this one, but we do have one which shows just how many loans China has actually given to the country. Not this one, it's going to come up in a few minutes, I promise. And for a lot of people, that is a concern, right? Maher, you've worked specifically with Chinese investors. Mm-hmm. Talk about how it's different working with them, and sort of why you chose to take in that money as opposed to elsewhere.
Well, we've been in a joint venture with Sinopec, the Chinese national oil company, for over 20 years in Nigeria. They come at Africa with a very different approach to investing. I mean, they're also involved in many different parts of the economy. They're invested in ICT projects, transport projects, power projects. What we found is that culturally, a very different approach to doing deals than, let's say, their European and American counterparts.
How so?
They rely heavily on government guarantees. Their capital is very patient. They have a very long-term outlook, ensuring that they manage their resources very carefully for the future of their country is polarizing sometimes, because they take a very China-centric approach. So what we found is culturally doing business with them, you've got to look very carefully at how to protect your interests versus theirs. But that said, the Chinese have an ability to look long-term, to make changes that are appropriate for the business. And the projects that they've been looking at in Africa are all around, mainly around resources, and bringing in their their technologies and their capabilities into the African continent for long-term sustainability. And that's kind of the different outlook I've seen working between Chinese and other counterparts.
Sergio, is that a concern for you?
You know, what we see in Africa is that there's many different countries or investors from different countries investing in Africa, and China, as the chart showed very well, is a very significant investor in Africa. I mean, there's 2 points that on the IFC side we look carefully. One is, I mean, as the private sector arm of the World Bank Group, we do want to see a bigger participation of private sector in the development of the continent, and it's a necessity because governments don't have the fiscal space to do to invest in everything that is needed in the government. And as Maher was saying, a lot of investments from China are publicly backed or with public guarantees and so on, so having an impact on government finances with a lot of debt and so on, and that's an issue that needs to be managed very carefully. I think the second part that is very important for an institution like IFC is that the projects that we finance and we support meet the best standards in terms of environment and social practice. And it's not always easy, and it is demanding, and I think everybody's looking at how you can move the agenda further to just make sure that we are taking good care of our planet and that we're taking good care of the people on this planet. And I think it's important that every investor coming in, from wherever they come, from whatever part of the world, that they do follow the best practice that possible.
But Maher was just saying, I mean, China is coming in with a China-centric, right, outlook, and so how do you ensure that you as an operator are sort of getting the best deal considering that?
I think the best deal you get is the one you can negotiate, and I think the Chinese are very strong in that sense. They negotiate their deals in a very powerful manner, and I think they're bringing in all the financing that they bring. Governments tend to compromise to ensure that they can bring them on board. But I think China is still catching up because for the last 50 years, many other governments have been investing heavily in Africa, and I think the African governments are much more used to European, American investment, more than Asian investment that's coming in. So I think there is maybe perhaps a resettlement of the amount of investment, a balance between East and West that's coming into the African continent.
Do you think so?
I do. I think so. I think they're still catching up because a lot of the port developments, infrastructure, roads, China has just been coming at that in the last 10 to 15 years. Prior to that, it's a lot of local governments and international investments that have developed those resources.
And when we talk in the short term, Sergio, and this is just another question from our audience here, how does the IFC measure success? I mean, considering all of these projects that are maybe sort of in the pipeline, in development, being funded, I mean, how do you measure what is actually, like, we're heading in the right trajectory?
So we are a development institution. So we are a financial institution. We finance, but we are first and foremost a development institution. So our success, of course, we want to make sure our projects financially succeed, so that companies don't manage to have a decent profit and do well. But we do measure, as a development institution, we measure what we call our impact, right? And we have a pretty rigorous methodology where before making any decision of investment, at the moment we make that decision, we look at what can be our impact, our potential impact of our project, right? And that has several dimensions, as project dimensions, so what is the project doing, but also there's a market dimension. So we really like projects that can be replicated. We are first somewhere that then others will follow. So we have a scoring mechanism. We have an independent team who does a lot of number crunching and gives us some very clear impact measurements. And then as the project unfolds, we monitor that and we compare versus what we thought ex ante would happen. And that allows us to then measure, say, okay, this project has been highly successful, unsuccessful, or highly unsuccessful. So we have to take risks, and it's important that we be ready to take projects that maybe will not happen. But we go with our eyes wide open and do our best to, from the beginning, set the structure of the project so that it ends up being a success. But and by the way, if I may just add one thing, Jennifer, on this, is that methodology that IFC has developed, being the leading development institution for private sector, I'm very glad that a lot of other DFIs, a lot of other multilaterals and bilateral partners have adopted very similar methodologies based on ours. So it's something that I think can have an impact on the market.
Well, and considering the numbers that you and your team are looking at, where are the scales tipped? Are the projects right now sort of in the highly successful camp right now, or are they still sort of mixed? I mean, give us an outlook.
So happily, our projects are overall successful. That's the good thing. We are, I think, also quite rigorous in our methodologies of developing projects. So we have a very good number of success. We estimate that if we have about 70 to 80% of success in terms of impact, that's a success for us and for our partners. That's even more important. So happily, things are going very well. And actually, Africa. I mean, I'm the VP for Africa, so I should say this so that I can pay a tribute to my teams. Is that we have actually higher rate of success than in the other regions. So I think it's a good practice to have.
And Maher, just finally, I mean, what is it that you're measuring in the short term in terms of success with Nigerdock?
I think a higher flow of projects and companies that come to register within our free zone, which is a big focus for our group. We are basically an enabler of trade. Our free zone and many other free zones that are set up in Nigeria, we're trying to create a better level of transparency, reliability in terms of power and access to infrastructure. And I think the more we focus on making sure that those very key enabling factors are in place, will increase the level of interest and investment and flow of funds into the continent. And if we can help to improve the flow of trade into the African continent, then that gives us more purpose, and that's a success factor for us.
Optimistic in the short term?
I am very optimistic.
Great.
Yes.
Maher, Sergio, thank you so much. Thanks everyone for listening.
Thank you.